Live. We are live right now.
Okay. And we're live on YouTube, so we'll start here in about 10 seconds just to give it a little bit of a head start on YouTube. Hello, everyone. We're so excited today. We've got such a great program for you. We've got with us Pooja Mehta, who is going to be doing a presentation. She's an attorney, consultant, entrepreneur, investor. And so we talk about her twin perspectives in promoting this, but really she has really a whole portfolio of perspective she brings to this work. So this is going to be a phenomenal session. Let me just take a minute, though, to introduce the program today because it is going to be such a great session. We got to thank our sponsors. We couldn't do this work without financial support from people like Purpose Rounds that is transforming customers and communities into owners and advocates. This idea that capital can be raised based on mission and purpose, not just economics. Halyard Compliance is a tremendous resource for both issuers and for portals looking for help in navigating the regulatory, sometimes we think of it as a morass out there, and Halyard can make sense of that. We're grateful too for our supporting co-hosts, Rotary International, Move the Needle with Rob Kaplan, the American Independent Business Alliance, Funding Hope, and Ridgecrest Herbals. We're grateful for their financial support, and we're grateful too for our co-hosts, the Crowdfunding Professional Association, and the Gig Group, the Casson Group, Dakin Capital, Community Vision Solutions, Crowdfund Main Street, and CrowdMax. Just grateful for all those partners that help us work and promote in these kinds of events. I want to thank and recognize Chandon, our producer. He does a phenomenal job of keeping our events organized, polished, and professional, and all the mistakes are mine, not his. I want to just note that we're going to be talking about financial stuff today, but we are not coming to you as financial advisors. This program is intended to be informational. If you need financial advice, there are some great people out there, including some lawyers like Pooja who can help you if you need help. So feel free to reach out to her. We really believe in the importance of what we're doing, and we're working to build a movement. And as such, we will give people $100 if they attend 10 of our monthly webinars. And you don't have to attend 10 in a row. As soon as you attend 10, we'll give you $100. The only requirement is that you invest in a Reg CF deal, and then we'll reimburse you the $100 that you put into a Reg CF investment offering. But here's the trick. This is the trickiest part. You have to attend via Zoom. Even though we're streaming this everywhere on YouTube, you've got to attend in the Zoom meeting in order to be eligible for the $100. That's how we take roll. That's how we know you're here. With YouTube, we can't know for sure. So to join the webinar in Zoom, and you can do it right now, it's not too late, visit 4sc.fund, 4sc.fund/July. That'll take you to the registration page. You can jump right in and join us here in the next few minutes. That will record your participation in Zoom and make you eligible to start earning toward that $100 reward. The details about the rewards you can see at rewards.4sc.fund. Again, we're about building a movement. We're trying to help entrepreneurs, social entrepreneurs especially, diverse founders, community builders, and to help these folks, we've got to invest, right? one of the great challenges with crowdfunding is finding investors. And so we're trying to build and accelerate the growth of the community of investors. And one of the ways that we do that is we have a monthly meeting of a group of small angel investors who invest $100 a month in one of the deals that we choose. And so we meet each month to screen new deals and make investment decisions. And you're invited to join us. You can learn more at impactcherub.com. Impactcherub.com. We are excited to have you join us and be a part of the Impact Cherub Club. Now, let me tell you a little bit about Pooja. Pooja is a phenomenal human being, and we're just so fortunate that she would make time for us today to share her insights. She is a dynamic professional with a background in law, entrepreneurship, and investing. And she's the founder of the Marigold Effect. And I just love what the Marigold Effect is named for. But it turns out that when you plant marigolds, they help make everything around them better. And so that is the Marigold Effect. That's why. And so her business focuses on closing the gender and wealth gaps, racial wealth gaps. She mentors entrepreneurs, volunteers at a legal clinic, and advocates for juvenile justice reform. She enjoys concerts, cooking, and hiking, and she's an amazing human being. I'm excited to turn the time over to Pooja Mehta now. Pooja, take it away.
All right. Thank you so much, Devin, for that very thoughtful introduction. And I appreciate everything you're doing, especially to build both sides of the ecosystem, right? We need to have investors out there that are doing this work, but we also need to have strong businesses that are ready to receive this capital. So I'm going to go ahead and share my screen. Hopefully this will work nice and well. Are we good there?
You're great.
Okay, perfect. All right, wonderful. So yeah, so we're going to be talking about like the twin perspectives. As Devin mentioned, I am both a founder and also an investor. So really trying to share insights from those perspectives to really figure out how you can stand out to your crowd. Righty. So I always love to start with learning objectives. I believe in like constant learning myself, and want to make sure that you guys feel like your time spent here with us today is valuable. Before we kind of really even think about we're going to go out and raise money, I like to think about assessing, like, what is your external funding needs? What are the business goals? What direction are you trying to head? I feel like if you don't have that North Star, it really kind of ends up being a much more difficult process. You want to optimize for profitability and investment. Basically, if you think about it, all the efforts that you might take to stand out to investors, all of that can drive improvements in your business and boost your own profitability. So I say, even if you don't even take $1 from an outside investor, this is such a useful exercise, thinking, could you actually go out and raise money for your business? Reg CF is just one path of many. I definitely encourage people to, before they go and decide this is the route they want to look, make sure they explore other options, whether that is like going for grants or looking to a community development financial institution in your neighborhood that maybe also be able to offer. And you may also decide that like you want to raise some portion of the money you're looking for via Reg CF because you're really important about that community aspect, but you may want to go to other investors or use some of your own capital for that other portions. And then in the end, all of this is kind of the learning objectives all really relate to designing a standout campaign. And so I always consider the first 3 parts of this as just like the building blocks to getting there. And one of the reasons why I think all the first 3 learning objectives are so important is that you want to be able to anticipate what will excite and also what will concern an investor. And that's particularly important in that regulation crowdfunding context where you think about there's really less opportunity for real-time interactions. You might have an investor that takes a meeting with you over Zoom or in person, and you can really engage in real time. to like clarify things or go deeper on a particular question. Whereas in the regulation crowdfunding, there's really only so much that you'll want to engage with publicly via the portal with your outside investors. So it's good to get ahead of that. Alrighty, and I'm going to save some time at the end for Q&A just to get to that. So a little bit about me. I know Devin already kind of mentioned that, but I have founder experience, like many of you, thinking about raising money, and I've done it quite a few ways. I've self-funded through my savings and personal credit cards, but I've also used other people's money. That has included like pre-selling to customers. I actually used to have a photography company and did a Groupon. I could tell people a long story about that some other day. I've done friends and family. I like to own that privilege in places. I've been able to borrow money from family. I've negotiated extended payment terms with suppliers, particularly when I owned restaurants. A lot of times in the beginning, people wanted like a check right when I was buying like a keg of beer. And eventually I was like, okay, pay you in 30 days. And that float was another way to kind of bring capital into my business. Had term loans from banks. And then I've also had outside investors in shared ownership and had like kind of equity investors. In terms of my investor experience, I had really mostly been in like the public markets before, but in 2021, I sold a big chunk of my business and was then able to invest more in private enterprises. And it's kind of actually was very new to crowdfunding there myself, and didn't know that I could have been benefiting from that earlier on. My investments that I usually I try to focus on both the social and environmental impact alongside with financial returns. And I'm very committed to using finance to address the racial and gender wealth gaps and tackle global challenges like the affordable housing crisis, and climate change. I'm a lawyer, and once a lawyer, always a lawyer. I've been very fortunate to have joined a law firm, Gilmore Condor, as of counsel, and they're really focused on the solidarity economy. So I'm doing most of my legal work through that because it's lawyering, like investing, is often done best with others. I'm also always on my journey of learning. I just am about to start a one-year fellowship at the Just Economy Institute in financial activism. And then Marigold Effect is where I basically do my impact investing out of and my business advising for entrepreneurs and founders. A lot of reasons why I do this work is because I think that fundraising and running a business is really hard. It is. There's a lot of barriers that exist, right? You got to have networks, financial legal knowledge, access to capital, messaging your business is really like key value. And then just education about that funding landscape. So through Marigold Effect, I really try to use business consulting and legal advising to address those barriers. So yeah, like I know about you, I think that everybody here probably considers themselves maybe an entrepreneur that's looking for funding, but I also love to let people remind that we can all be investors as well. And so again, like as I'm saying, I'm putting myself in this mindset of founder and investor, you too also can. And I think regulation crowdfunding has made this more accessible than ever. So the first question we want to really tackle is raising money right for you? There's really no right way to fund or grow your business. You got to trust your vision and find like that sustainable path for growth. And one of the things you want to do is like kind of consider like, what's your long-term vision for your company? Are you really interested in maintaining 100% ownership indefinitely? Then you might want to like consider mostly like debt if you were to do any kind of crowdfunding or raising capital outside. Or maybe you're more open to sharing ownership, and so the equity would be interesting to you. But I really think you kind of have to understand what that is. And what's your time horizon? What is the length of time that you want to stay in the business? Also think about succession planning. Like who is it that you kind of envision that might take over your enterprise in the future? Is that family, employees? Do you have some aspirations to be acquired or sell your business or going public? And then what's your strategy? Are you a lot of times people want to maintain their current level of operations rather than like this kind of, I think we live sometimes in this like capitalistic framework that like, oh, you have to constantly keep growing and growing. And that's not always true. Sometimes we just need to get better at the current level of revenue we have and can sometimes take home more money without having to build in more sales. All righty. What does this, capital help you accomplish, right? So I would like to think about the purpose of the raise. One thing I like to tell people all the time is raise money only if you need it. I think we live in a time where like there's Shark Tank, there's so many ways that people like there's like some glitz and glam associated with like, oh, I raised this much money. If you don't need it, it's not a win. So I currently have a service based business. So with Marigold Effect, I didn't need to go out and raise outside capital. I was able to rely on the startup expenses to be met with my savings and some personal debt. Now, in the past, when I had restaurants, those were some capital intensive projects. So it was really important for me to go out and get other money. So I applied for small business loans and backed by like the Small Business Administration. And that was especially for my first one. And then in my second business, I actually went and found external investors. And at the end of the day, like you want to know your purpose because investors want to know where their dollars are going to be used for. Like, what are they supporting you accomplish? Is that equipment, real estate, renovations to a storefront, launching new products? Basically, nobody wants to say that you're helping you fund like some back taxes. So know your purpose. And then timing. Determine when it is the right time for you to seek investment. You don't want to raise so early that you don't have any proof points like product market fit, which we'll talk about a little bit later. You want kind of these like data points that you can like point to be like, I'm a compelling case for investment. And also fundraising can be very time intensive and expensive. So you want to factor that into your kind of what we call like the cost of capital when considering your options. Like I said, I like to think about getting into like the investor mindset when you start to do your raise. Can you come up with like a list of questions and answers that you would be ready to present to that really like present your business in like the best way possible? And you've already done this, right? You've already thought about your business from the perspective of like what, customers and doing that research. So now it's just another step to think about it from an investor standpoint. Like what makes your company or what it is you might offer on an investment crowdfunding platform compelling to an investor. And in order to do that, you're going to really need to think about like, who's your ideal investor? What do they care about? What do they want to know? If this is people in your crowd, you're already probably like hearing like what resonates about your products or services. And like I said, just like you research your customer, do this again with that investor mindset and think about two types of return that are part of a return on investment, right? That financial one, like what might be a rate of return that an investor is going to want to know they're getting. And then what are the repayment terms? Are they going to, with a debt investment, are they going to get paid out quarterly, all in a year's time at the end of the investment? If it's equity investment, it's probably in a much longer hold. So you're going to probably have to find, know that you'll be relating to investors that are more patient. And then what type of impact is part of the return that you can maybe make sure that you're presenting to your investors that would be interested in that. So we're going to go through some of the kind of common investor questions that I think that maybe could be part of your FAQ. So why does your business exist? One thing I want to be able to get clear on is that you have an answer to this, because who says no all the time is a confused investor. Could you explain your product or your service with one sentence? So here's the Apple iPod, right? That's like over 2 decades ago of an example, but I think it's pretty enduring how Steve Jobs said, 1,000 songs in your pocket. I'll bring you a little bit closer to today's time frame. Spotify, right? All the music you'll ever need. Can you use one sentence to explain the value of your product or your service? What's another question? Have you achieved product market fit? And this is a way to uncover why your business exists. Product market fit is basically when your company's product or service perfectly satisfies the needs of a very specific market. And what does that do? It signifies that you create value, that there is a demand for your product or service, and that there's potential for growth and profitability. So you want to be able to identify what is the specific problem that your business is going to address, or will it address, So people want to understand, is this a problem worth solving? And if it was solved, would it improve people's lives? And then who do you help? Just like how you defined your ideal customer and understand their needs and preferences, you want to be able to convey that, right? Who wants what you offer, that they're willing to pay for it, your solution. And then once you know who that is, where can you find more of these people? And then how can you reach them more effectively? How do you help? So a lot of times you'll see, like in investing, they talk about problem and then solution. You want to basically make sure that you're listening to your customers, like what benefit are they getting from your product or service? Then you can also try to start to identify what are the ways that you can improve their experience. A lot of times I have my clients say, like, can you go out and do surveys? Are you able to observe them, talk to them, like look at your data? All of this kind of like seeing like how people are using your product, where they're feeling like you might be losing users. Those are all things that kind of help inform what people like often refer to as your product roadmap, because the business you start with, right, is not the business that you end up with. We're always iterating and improving on that. How are you unique? How do you set yourself apart from competitors? I always think competition is like a beautiful thing because it demonstrates to investors that people already want what you're offering. But how can you say, okay, but I'm doing this in a way that is even better? And because you really want to get investors to be like, okay, I want to go with you. Like, how can I actually join your offering? And a lot of times that's about saying how you're unique. And then how big is this market? If this problem affects a lot of people, it's more likely to get an investor more excited. As a founder, you're more likely going to be able to wake up more energized to want to keep doing what you're doing. So you want to basically be able to talk about the opportunity. You can use words like there's this unmet need, or anybody who's solving this problem is not doing that great of a job. You can also start talking about like, why now? Like maybe like it's not been a big deal that a certain problem hasn't been addressed, but today this is like, build some kind of urgency around it. You can say that the category of like consumers in this particular area that your business is growing. And then ultimately what you're trying to say with how big is this market is that you're going to be able to make money for yourself and a potential investor. So I don't often talk a lot about the investments I make for a whole host of reasons, also as a lawyer related to Devin's whole disclaimer thing. But I like to talk about this one here today because it's a good example to talk about like why I said yes and to think about the investor and founder mindset. So as context, Brightland is a company that achieved product market fit by addressing a very specific need in the market for high quality olive oil. So the founder in this situation identified a problem or need. They were living in New York City. They were always eating out, and they wanted to start cooking at home. But every time they were cooking at home, they started to have like these really bad health issues. They thought it could be like an allergy to gluten or dairy. But then they started working with the nutritionist and came to find out that it was their cooking oil, and that they realized that there was this whole lack of transparency around the olive oil industry, with like a lot of things being like fraudulent or cut with other oils. So they basically saw, oh, wow, this is an opportunity to provide customers with something that's premium, authentic, in something that they needed themselves. So what they went on to do for their now the solution side of it is they were living in New York City, but they found some small farms in California that were practicing organic farming, like regenerative agriculture. And they also were like, okay, well, these farms aren't going to be in business if there's not a demand for it. So they wanted to spotlight the farms that weren't getting the support, that would probably not exist in 5 to 10 years. And they knew that they could work with them because they were so small and focus on the transparency issue. So they were able to basically use these small farmers to solve their thing, their problem, and their whole unique selling position, right? Talked earlier about how do you demonstrate that you're unique, is they like have this really good looking branding, design, and they use storytelling. They basically, because they also were kind of late to the game to discover how bad olive oil was, they wanted to educate consumers about the benefits of what their product offered and emphasize that it was authentic, that it was fresh. They also did things like used recycled jars and glassware that were like UV protected to like protect the integrity of the oil. So, and then when they went to investment, when they started talking about their why, basically they had to really demonstrate that they needed the money for something very specific. So they were like, they wanted to expand products. So they already had to show like, we're already selling some, but if we had your money, we'd sell a whole lot more. And then where they could go with this. So they were like talking about entering new markets and building partnerships with stores. All right, so what are some other questions that might happen? And so I would be asking, where have you been? Like, what progress can you show? And what does progress look like? I'm going to talk about a couple of things that you can say, but kind of just to step back for a minute, you want to basically, you can't measure everything in your business. You'll go nuts, right? You are really running on probably way less time than you wish you had in a day. But are there some specific outputs or outcomes that you could use data to start measuring so that you could convince investors you're having, what's referred to as traction, right? Some progress in there that you'd even have more traction if you had their investment. So this could be things like saying, you've got more customers coming in and that there's a mix of both repeat customers and new. Really, whenever you are able to talk about that, you're basically saying people get value from your product or service and they keep coming back. You can talk about strong retention. You can basically say something like, people would be disappointed if we went away. If you want to talk about revenue growth, like say, I am selling already, right? Not, you may be pre-revenue, so we'll talk about ways that you could demonstrate that. But if you have revenue, even a little bit, if you can show that like in month 1, you sold like 2 things, but in month 5, you sold 6, that's growth, right? So any way that you can show there's a trajectory month over month, or even to show that, you have diverse revenue streams. Like it's not just one customer you have maybe several customers. And how can you show that like growth is organic, or you're getting referrals, or there's some word of mouth that like not everything is coming from like paid advertising. If maybe you're not proof of revenue yet, but you can say that, there's some social proof you can offer that people are talking about you. You've got some kind of press coverage. And maybe you can say that people are pre-ordering, right? You don't have the money yet to make it, but you already have like a backlog or a wait list that would basically be a thing you could say in a crowdfunding campaign, like money would help us meet the strong demand that exists. Next question people are going to ask, okay, we talked about where you're going, but where have you been, right? Can you show that you are on a path to demonstrating profitability? One thing I love to talk about all the time, and I think I mentioned it earlier, is there's always this focus on like, I want more sales, I want more sales. We always want to make sure we're not growing revenue in a way that our expenses start to outpace that. So I always say like, you got to keep expenses in check as you manage your revenue to maintain profitability. You want to know your profit margins. I've met a lot of founders that really haven't like looked at what is often referred to as that unit economics. So let's say that Brightland was selling their bottle of olive oil for $10. Now, if their costs exceeded that, there's no point of doing this business. But if they say that their costs are $4, then they can say, okay, our profit margin is $6. And how much better would it be if they figured out ways to even reduce their costs to $3 and have their profit margin equal 7? So you want to be able to like really talk about that so that people can see that there's a path to like investing, and then that's actually going to lead to profitability. Another question that investors are often thinking about, okay, what's in the future? Like, what can you get them excited about like coming on to your business right now makes sense? Do you have some new products or services that you'd love to offer your customers, but you just can't do that without that capital infusion? Are there opportunities that you're having to say no to right now because you don't have the right cash flow for that or the right capital? How would you use these funds, right? Like where could you plug those in? One of the things I work with like entrepreneurs is like looking at financials. I know it's not always everyone's favorite thing to do, but often our numbers tell a story, and it's important for us to control the narrative and show how the use of these funds from an investment crowdfunding campaign would help us become profitable or have greater profitability. And then obviously in the future, people are going to want to also know, like, okay, like, what's the strategy for repaying investors? What's the how? What's the when? And does that look feasible? I often want to know from a team, if I'm looking at making an investment, is who's going to get this done, right? Who's helping you make the decisions and improve on your ideas? It could be your employees, your partners. Oftentimes, I'm more likely to make an investment if somebody has a co-founder, because I know there's somebody that's helping for emotional support, distributing the workload, diversity of opinions. Somebody's like gut checking your ideas and your decision making. Oftentimes, I still invest in people that are going at it alone, but it's still, they are able to demonstrate that they have other people on their team for experience and expertise, or they have a track record, right? They've had advisors. Maybe they've already started to think about who they're going to partner with for partnerships and work in collaboration with. And the reason why I really find this particular question really important for me as an investor is that oftentimes the business needs to pivot, right? I mean, we've been thrown so many curveballs just in the last 5 years, and I don't think a lot of things that we could ever have predicted. And if you do need to change direction, an investor wants to know, okay, this team can get it done. If the business that I've invested in today isn't the one that they'll need to have in like a year's time, they'll still be able to react in the best way because of the team they have. All right. So what are some considerations that I think are very specific to understanding if regulation crowdfunding is the right capital for you? So one, you want to think about like your particular fit for your business, like crowdfunding, for a US company. A wide range of companies tend to perform well, but some tend to perform better. If you have customers, right, already, that you have a crowd that you can really get excited about this. Consumer products, technology, healthcare. There's a big emphasis on like local via specific platforms and social impact. What are your capital needs? Ideally, if you need a lot more than that, maybe crowdfunding wouldn't be achievable for all of it. And like I said, I often see businesses that don't go out to crowdfunding for their entire capital stack, maybe just a portion of it, but it's good to know what are the kind of capital amounts that you could raise with regulation crowdfunding. Who's your ideal investor profile, right? You want to be able to kind of say that you're like, a lot of times, like what I see with investment crowdfunding is there's this true emphasis on sharing wealth building opportunities with your community and your customers. It also allows you to expand your investor pool to have both individuals that are accredited, which are considered like high net worth individuals, either by their income or their actual net worth. But you also are able to have ability to reach non-accredited investors as well, which makes investment crowdfunding unique. And your customer base can become your investors and also your biggest champions. So that's something that's really unique to investment crowdfunding. And then I think Devin also alluded to this. There's a lot of regulatory issues around it. So you want to make sure that you're ready for that. The disclosures you'll have to make. It is definitely a more public way of raising money. You would have to share like your financials. There's some ongoing disclosures. And there's also like fees to portals. And sometimes you do need to get some accounting or legal help at the front end and then ongoing. So what actually, brings all of this together to have that kind of standout campaign? One thing is relationships, right? You want to be able to say that you've connected with your crowd before and during, and then definitely after your campaign, especially if you're going to come back out there and try to raise more money, or you want to make sure that you keep your investors really motivated about like talking about your brand and being supportive of it anyway. So this could be like, having an online presence, social media. I tell people all the time, don't rely just on Instagram or TikTok, right? There's always going to be a talk about a ban. There's always talk about how the algorithms keep changing, and you might have like, 100,000 followers, but only like 3 people saw your post. Like, what? That doesn't make sense. So social media, I think of as, part of it. But if you can get emails and phone numbers and have that like direct connection to your customers, your crowd, I think that's so much more powerful. And it's even showing how much more power that is now. Is there events? Is there any kind of direct outreach you could do with like a potential lead investor? Is there ways that you can start to build trust with your investors? In the end of the day, like nobody likes it, right? None of us, likes to be like ghosted. And certainly an investor wants to know that they're being communicated with. So it's important not to go dark and to keep those channels of communication well. It's also part of your communication plan, and your compliance will really want to stay in good connection for that. And then you also want to be able to tell this really big story. And these are like kind of how everything was the building block earlier. It's like, why your company and why now? You're going to basically use all this information that you've developed about why your business exists, about your product market fit, to tell a super powerful story about your business, about your mission and your purpose. And it's one of the things that, like, when I do look at investment crowdfunding offers, I'm really compelled with like, what is the story that they're telling? You want to make sure that you're making the right offer using the right platform. Best thing to do is like try to find other businesses either in your area or in your kind of particular product or service, and research them. See what they're offering for rates, see what they're setting as goals. So make sure that you're kind of really not offering too little or too much in your own particular raise. I would say you want to make sure that you're having a realistic funding goal that like is tied to your business goals. See a lot of times people raising like a lot more money than they can demonstrate that they need, or they're raising too little, and then that doesn't make sense because you're investing so much time and energy. So you want to get that number right. So think about what is the right offer so that think about it again, like from your own perspective. If you were an investor, does this seem like the kind of money that you would put in? Is this the kind of thing that seems compelling to you when you're out looking for offers? If you were like, well, why would I do that? Then you have to wonder, then another investor might think the same thing. And then in terms of researching the platforms, you want to see what are the fees going to be to you. Some of the platforms also charge fees to investors. Some focus on real estate or climate, Main Street businesses, trying to find one that is good for you, and trying to find one that has like a good reputation. And FINRA is actually a good resource to make sure to check out that they're all doing well there. And then what are the strategies that you can develop to help you reach your milestones? There's donation crowdfunding or Kickstarter and all that, and they offer perks and they don't give people investment, but I think we can still take some kind of like inspiration from them, because if you have a product, maybe a perk could be some type of product that you have, or maybe people might, if you can make something that's interesting, swag, something sentimental. If you're a brick and mortar local business, some type of experience, anything to think about recognition, early discounts for investors. If you want to try to build some momentum, a lot of times strategies like that work. I have a friend who invested locally in a business, and she always had like a great seat at the bar. And so it was one of the things where she always thought to like bring everybody to go to this particular bar that she was an investor at. And so it was something where that particular business not only got an initial investment from my friend, but then they got this ongoing kind of support along the way. So thinking about how you can translate that into your own offering if it fits uniquely for your business. So just as a recap, one of the things that you want to think about is assessing your need for external funding, optimizing for profitability and investment, evaluating all your options for accessing capital, and then, always trying to adopt an investor's perspective in designing your own campaign. Thank you. I will see if there's any questions.
Does anybody have a question for Pooja? You can submit those questions in the Q&A function at the bottom of the screen. But uh, Pooja, while we're waiting for thoughtful, good questions, I've got a question or two I want
All
to
right.
just put to, if you don't mind.
Yeah, of course.
Uh, when you're raising money from the crowd, it's important to get money both from small investors who are part of your community, your customer base, et cetera, uh, because there are lots of them. But it's also important to get some money from big investors. It's hard to raise the capital you need without getting some lumps of capital as part of a crowdfunding campaign. How do you coach people to adjust their strategies to reach both of those somewhat disparate groups of people?
Yeah, no, that's such a great question. I think definitely a lot of it comes about like thinking about this well before you start to raise. Having conversations offline is super important, particularly with finding a lead investor, somebody that you can think about that maybe you've met through other places that has already demonstrated some interest in what you have. Because you may want to be able to like tell them, like kind of coordinate like their investment into your business with when you are actually starting your campaign. Because a lot of this is about momentum. So we all like to basically like, once I see that like a lot of people have invested in something, I'm like, okay, well, if all these people feel like this is a good decision, right, I might be more likely to go along. So a lot of times, like the larger investors, you might need to have deeper conversations with, where somebody who might be on a platform as already maybe like kind of into investment crowdfunding, and so you really just need to sell them about your particular idea, and they may have like a real belief in this as a way to like kind of democratize investing and getting access to capital. So I do feel like the larger investor does need to maybe have like a little bit more of a conversation. And that is something I like to see people try to set up beforehand.
Yeah, that's great advice. Especially those large investors. It seems like they getting some money from them or getting a commitment up front will help accelerate the momentum early on, and that momentum is important. Great guidance there. We Nicole Vitello, who has raised a lot of money for her organization with under Reg CF, had a similar question. She said, "Can you talk about combining Reg CF with other offers?" I think she's talking about other, campaigns under different exemptions to maximize the strength of both.
Yeah, absolutely. So, I mean, I would even go broader than that to think about, if you could say, let's say you're a business that had early on got some grant capital from like a competition or some other kind of maybe participated in an incubator, an accelerator. Like that is a way to kind of two things that you can kind of show in your investment crowdfunding campaign. One, you could talk about that, right? So you can basically say, like, look at like the other people have already believed in me. They gave me free money, for gosh sakes. But then you can really de-risk the business for yourself and for everybody. Like free money is the best money, right? Then after that, you want to find money that is like considered like the least expensive capital. And one of the things that I have sometimes seen is people don't raise all of their money in regulation crowdfunding because it can be an expensive source of capital. And if you basically could go out to a bank or a CDFI and get a lower rate of return, or maybe you could find an angel investor, or some other type of way, a grant capital, and start to kind of like think about like building your money in lots of different ways. I think I have a slide on this that I wasn't going to share, but let me see. Okay, yeah. I was thinking about like, we talk about like the blended capital stack, right? So you're thinking about all the different ways you can build your money. And you definitely, even if you can say like you're getting a lot of your, like you're supporting yourself through your own revenue too, right? Any way that you can show that a lot of different types of money are coming into your business, it makes it stronger, both intrinsically as a business, but also how you're able to talk about it to outside investors. And sometimes I've seen businesses where they have a network, so they're able to access accredited investors, and maybe they'll go and do that for a portion of that. They either want to make sure that they're rewarding their community, and therefore they're having a regulation crowdfunding campaign, or they feel like it's, it's just like what they believe in terms of like, this is a platform as a form of investment. Or it could be that like, it's just, they don't get all the way to the top of their capital stack without regulation crowdfunding. And so they add that to it. So it's definitely important. I think every type of fundraising has like its own pros and cons, right? I mean, there's no real free money except for really free money. But like, I've had term loans with banks, but there's all sorts of like financial covenants, and then they needed audited financial statements, and are very like onerous in the beginning, right? Until they were like confident with me, but then like that creates like more hassle. So you're always balancing all the different ways you're raising money. Hopefully that answered that question.
Nicole had a great answer. Nicole had a follow-up question, and she helps run a social enterprise, and you're very purpose oriented. So I think you're perfect to answer her question. She says, how do you talk about a lower return rate on a socially conscious investment versus a more traditional return or higher returns on traditional investments?
Yeah. I mean, I wish you could talk to everybody about this. This is my hope one day, right? But I think definitely it is knowing who your ideal investor is. I think that market rate returns, right, where basically people are saying like without any emphasis on kind of the impact side of it, is what like a lot of people are seeking. And when we do find people who are values aligned, or we can educate them, right, have all the proof points in about how our product or service is compelling, we can then meet those people. And it's a lot of times about understanding what your investor cares about, because sometimes they might be investors and they're always looking for market rate returns, but then they're doing philanthropy in an area that might be adjacent to what you care about. And then you might want to start talking to them about what is like known as like the full spectrum of capital. It's like, well, you're giving away money here. That's negative 100% return, but you're wanting 10% over here. Like, why don't we just do like 5%? And then you can think about like, this is actually you also contributing to the larger social good. So sometimes you might find people who haven't thought of themselves as impact investors, but they are generous with their money. They do think about other things, whether it's in their community or their school. They might give back to their college, whatever. It's just about understanding the investor mindset and then helping them see that your business is contributing in different ways. And sometimes you have to also talk about like how money, like when you are getting such high rate of returns, it is often extractive on something, right? If a business is producing so much money that it's able to offer such a high rate of return, maybe it's because they're like, harming the planet, or they're like doing it off the backs of their employees. But what you are doing is you're running a business that is like fair to your employees. It's fair to the planet. Like you're seeing everybody in it. And so money is a component of it. And like money can't necessarily take everything if we're going to also care about people and care about planet. So I think it's a lot about scoping your entire business in that. It is lonely out there. But I think that, a lot of reasons why I do this work, why I'm about to do that fellowship, is we have to find the others. We're out there. We're out there.
Yeah, it's well, that's a great discussion. I want to just shift to your other perspective for a minute. Investing in private companies, be it Reg CF or otherwise, is risky. And I also think sometimes perceived as being riskier than it is, but it's certainly risky. We can all agree on that, I think.
Yeah.
Getting better returns requires doing better due diligence, better screening. When you're making small investments, it's hard to justify hours and hours of due diligence. How do you screen your small investments, especially? How do you choose what to do with relatively small amounts of money?
Yeah. Well, I'll be very honest. A lot of the ways I also do some of my philanthropy is like finding proxies, right? I mean, I think that I care about so many things, but I am not well versed in all the issues in the world. And sometimes it's like, I was just on a call with somebody and they told me they did an investment crowdfunding. And I was like, oh, tell me more about that. And then I went and checked it out. So it's a lot of times it's like, finding other people who have invested in something and that I trust, that their values aligned. A lot of times I look at it as like, okay, if this succeeds, that's awesome. But if it doesn't, am I happy that somebody's out here trying this? So a lot of times, even I think about like angel investing, when I kind of had access to that starting in 2021, I mean, that's gambling. I don't care what anybody else wants to call it. It is gambling. And I have had investments in that space go to $0. But don't bring me something that's like some fintech that like I've seen 30 of these already that's not going to make any difference in the world. So I think a lot of people, even in spaces where you may not think that they're impact investors because they don't wear that label, they really want to like see like if this happens, like they're excited. But if it doesn't, they're just really happy somebody's out here trying this. And so I think when I do like some of the smaller investments, I do think about that. Like, is this important? Is this a founder that, a lot of times I'm investing in people that are like, they've been traditionally boxed out of capital. And I'm like, well, there needs to be more money flowing to people that are like first-time entrepreneurs, people of color, women, people that are just, maybe have some kind of other way that they're just like underrepresented or disenfranchised.
Yeah, great point. Well, as we wrap up here, Pooja, I wonder if you would just take a minute and tell people hire you for help, right?
Mhm.
What do they most often hire you to do? Help people understand what your sweet spot is.
Yeah, I will say, because I've been an entrepreneur many times, I think a lot of times what people hire me for is when they're really overwhelmed and they know that they are running on fumes and it is hard for them to focus on like where do they spend those like 30 minutes they may have in a day that are actually going to drive something positive in their business, right? So I'm very like what I get really excited about is helping people think about like what is it that they might need to remove from doing because it's actually not really doing much in their business, and like just getting way more laser focused on what they are. And so I think it's always helpful to, especially if you are like a solo founder, to have somebody that's a little bit like a sidekick to be like, you may not need somebody for very long, but I think when people get stuck, because I've been stuck many times in my own journey, it's helpful to have somebody to talk it through.
Yeah. It's well, that's great. Pooja, thank you so much for taking the time to join us for the Super Crowd Hour this month. We're grateful for the insights you shared and the wisdom you provided. I think we had some great questions from Nicole, and your insights are invaluable, not only to her, but to everyone else who's watching or will watch the recording. So thank you.
Thank you so much for having me.
We're excited to, please keep in touch, and we'll look forward to seeing you succeed in the great work and helping other people succeed in their work. So again, thanks everybody. Thanks for being with us today. We'll look forward to seeing you all again soon at our next Super Crowd Hour webinar. Bye-bye now.
Bye-bye.